Welcome to this episode of our 3-Minute Investment. We help you easily understand the financial reports of popular companies. So you are looking at the pharmaceutical industry, and there is one ticker symbol that dominates the conversation, LLY, which stands for Eli Lilly and Company. By early 2026, this company reached a massive milestone, becoming the most valuable pharmaceutical company in the world by market capitalization, meaning the total value of all its shares is higher than any other drug maker. But looking at the stock chart, you might see a vertical line going up. The price is extremely high relative to history. You might be wondering if the opportunity to invest has passed, or if this growth trajectory still has plenty of momentum left. To find the answer, we need to look beyond the hype and analyze the actual financial statements from the third quarter of 2025 to understand the real fundamental business performance driving this price. First, let us look at the revenue, which is the total amount of money brought in from sales before any expenses are paid. In just 3 months, Lilly generated $17.6 billion. That represents a 54% increase compared to the same time last year. This is called year-over-year growth. For a massive established company to grow its total sales by over 50% is incredibly rare and signals a massive shift in demand. The primary driver of this explosion is the metabolic portfolio, which consists of drugs treating diabetes and obesity, specifically the products Mounjaro and Zepbound. In just the third quarter, these two products alone generated nearly $8 billion in sales. To put that in perspective, these two drugs are generating more revenue than many large companies make in an entire year. Now we need to look at a key efficiency metric called gross margin. This represents the percentage of revenue the company keeps after paying the direct costs of manufacturing the drugs. Lilly reported a gross margin of 80.5%. This means for every single dollar they earn in sales, they retain about 80 cents to cover other expenses and profit. This indicates they have incredible pricing power and highly efficient manufacturing. But future growth requires investment. In this quarter alone, they spent $3.8 billion on research and development. This is money spent creating new drugs to ensure they stay ahead of competitors. One specific innovation they are funding is a drug called orforglipron. This is an oral pill taken daily. If successful, it would replace injections, making it much easier for patients to take their medication and expanding the potential market significantly. However, we must look at the risks. The stock is currently trading at a level that implies investors expect flawless execution. This is often described as being priced for perfection. We measure this using the PE ratio, or price to earnings ratio. It calculates how much investors pay for every dollar of profit. Lilly is trading at 50 times its earnings, which is much higher than the industry average, suggesting the stock is expensive relative to its current profits. This high valuation creates volatility risk. Because expectations are so high, if the company misses a target even slightly, the stock price could react sharply downward as investors adjust their expectations. Another factor is the long-term debt, which has risen to $32 billion. This sounds like a lot, but they are borrowing this money to build factories because demand is so high, they physically cannot manufacture their drugs fast enough. So is it a buy? The numbers tell a story of a company with unprecedented growth and dominant products, but that comes with the risk of a very high entry price and the pressure to maintain perfect performance. Ultimately, investing in Eli Lilly right now means paying a premium ticket price for a seat on a very fast-moving train. You are paying for high-speed growth, but you must accept the risks that come with such high velocity. Thank you for watching. Let us know what companies you want to know more about in the comment below. Please subscribe for more financial analysis to rocket your investment.